Good evening, good evening, guys. It's Aikido here. Where is my mask? Before we get down to business, because I'm actually live streaming on TikTok, but also I'm recording this video because I want this lecture to be part of the YouTube channel. It's basically a review from last week. So we have DAX. We were trading the London session. So I talked about how you can trade the 4-hour power of 3. So when you're trading the 4-hour candle, basically when you're trading the London session, the London open, you're basically trading the 4-hour power of 3 open, high, low, and close. So I know that you don't see maybe anything yet, but I just want us to focus on this candle right here, this down close candle. Okay, so I was looking at how price went above relative equal highs here, and then it filled that. This is actually a new week opening gap. So you look at Friday's closing price and Sunday's opening price. The difference is the new week opening gap. So that thing actually works like a fair value gap, works like a weekly fair value gap. Okay, it's like a weekly fair value gap basically. Price is going to constantly refer back to that. So I looked at how we went all the way up and filled that imbalance in the form of a new week opening gap after taking out some sort of buy side liquidity right there on 4-hour, and then the market completely went lower, repricing into the discount of this range here. And in doing that, it left a change state of delivery. So it closed below the 2 consecutive up close candles on the 4-hour here. So that if you can extend that thing out, that's a bearish order block on 4-hour, but also you can get the main threshold of that 4-hour bearish order block, and if you measure the midpoint is somewhere around there, or close to the main threshold, you have the opening of that candle right there, which is the last up close candle prior the run to buy side there, and this sell-off, which we created a bearish a change state of delivery here on the 4-hour. That opening is very much sensitive. So if I'm going to be trading this 4-hour power of 3 or London open session, I'm obviously going to lean bearish than bullish, because this, I'm looking at it as a retracement, and I can even assume that we have these relative equal lows as our target. It's a drawn liquidity, but I don't need to go all the way down to these relative equal lows. Actually, to be honest with you, that's what I was thinking. Okay, I said, okay, at least this short-term low could be the target, or the weak CE down here, because you look at this rejection, how we took those sell side liquidity right there. We might not take out this low because this is a protected low. It has liquidity from this side, and therefore it is a high resistance liquidity run. Okay, so we can just target maybe the CE of that, because then we'll be reclaiming this rejection block right there. So that's my draw for the session. I'm leaning bearish. Okay, I'm leaning bearish, and I'm looking to trade this 4-hour power of 3. So it is the open, high, low, and close, and that's exactly what happened in the bootcamp. Okay, so I was live with the guys in the bootcamp, and that's why I'm reviewing this trade for them, because I was actually mentioning these things live, and some of them, because the bootcamp is free to anyone who wants to trade the 3,000 to 500,000. The guys actually wanted me to further explain this trade, because I kept on mentioning the 4-hour power of 3, and I was happy with each opening inside that London open kill zone. Okay, so I'm now gonna go to I'm just gonna end. So now I just opened my annotations here on the 4-hour. We have the new week opening gap, and I have that opening of that bearish order block right there, and I want us to look at how this actually was panned out during the London Open, and how I coached that. I caught that sell to the downside together with the community on Discord. Okay, so this might look like a small candle, right? But I'm telling you, on 1 minute, it's a fucking long ass trade. It's a fucking beautiful trade. So let's go down to let's check the 15-minute time frame so that I want to show you guys something on the 15-minute time frame and what was also supporting this trade idea. So this is the part that I'll be trading, right? This is the part that I'll be trading. This is the price leg that I'll be trading. Okay, just focus on that price leg from this bearish order block down to that bullish order block. So I'm trading from a breaker to another breaker, from a bearish breaker to a bullish breaker. So if you don't know how to trade from a breaker to a breaker, I'm showing you this today in real live in action. Okay, so I'm just going to show you how we took the trade, and if possible I'm going to go to my Discord and I'm going to show you those trades, and on record. Everything's on record. The screenshots of the people making money live on Discord with me. And my brother Kem was also part of the live stream on Thursday. This was on Thursday last week. So this is a review from Thursday, August 8th, 2024. So you look at how we have this dealing range high and this dealing range low. Why is this a dealing range high and low? Because this high has liquidity from that high, it has liquidity from this side, and this low has liquidity from that low, and those are lows right there. So this is a dealing range. So I'm trading inside this dealing range. So we are moving from we are moving from discount to premium and from premium to discount again. So if you look from the swing high to that swing low, you can see that price is above equilibrium. So if I were to just measure the high to the low, equilibrium is right there and price is above equilibrium. And what do you have at equilibrium? We have the 4-hour order block, which is our first point of interest, and inside that bearish breaker, we also the 4-hour order block is also aligning with this 15-minute order block right there. So those are and also there is a small fair value gap right there, which price failed to actually reach to inside that fair value gap, and that was a good indication. I told the guys on Discord that I'm looking for price to I was actually ready to even go short right inside that fair value gap on 15, put my stop loss just above the high here. Then as it melts, I was just going to be adding into targeting this breaker high, and also I had my standard deviations. I'm going to show all of that on 1 minute. I my standard deviations there on 1 minute. Okay, so I had a bit of problem with my network. My signal was bad during that trade, so I couldn't communicate everything that I was seeing in real time because I kept getting cut off from that live stream. The signal was really fucking bad. I think I was under load shedding. You know how it is here in South Africa. So looking at that premium PD array during the right time, the kill zone, and you're moving from discount to premium, and you know that from premium you're gonna go back to discount, right? So look at how this bearish order block, this bearish breaker is at premium above the 50% mark here, and look at how we moved from this range to the lower part, which is the discount part. We don't have to go all the way down, guys, because already here we've made some bullish market structure shift, and a bullish order flow has been initiated, but this is like sort of a retracement. But at the time, I was positive that we could see it run those lows and potentially that low and feel this, and maybe even go all the way down to this low. But I was looking at that CE as a potential draw, like obviously this candle, right? This movement to the downside here creates that wick on the higher time frame. You remember the 4-hour wick to the downside of that. Let me go back so that I'll show you guys exactly what I'm talking about. You remember this week here, this week to the fucking upside. Sorry about that. Okay, I don't know what's happening here. I am trying to go back to. Okay, my network is slow, but I'm just gonna wait for it to come back. So that was what I was doing, and that's what I was focusing on the 15 minutes. On the 15 minute, we are looking at the bearish breaker order block, Oh my goodness. You see, my signal is still fucking bad. That bearish breaker to that bullish breaker. Okay, look, now let's go down to a 1 minute so that we can start starting price action at the right time as at the opening. Let me go down to the 1 minute. I don't want to make this a long video. I don't want to make this a long video. So I already have the annotations, okay? And I'm just trying to actually, this is Friday's price action. Let's wait for it to load. So this network is really bad. So I'm getting fiber now. I'm getting fiber. They've already installed it. I just need to get connected. So I'm waiting for the guys to install the network provider basically to come actually install the things for me here. So yeah, I'm gonna be live now on Discord for the Sundays SPR. So unfortunately, I'm using my phone to live stream. I can't cancel and buy data so I can continue this thing smoothly. You'll have to just persevere. Just bear with me here. I can't buy data because then it's gonna load even faster. My network is just not so good this evening. So we're now at 3 p.m. on Thursday. We'll have our annotations once we get to the London at, there we go. So I have this thing right there, and right there, and there, there we go. So I have these annotations right there. I want to show you exactly what my eyes were actually paying attention to. There we go. So okay, and this is what you see on the 15 minute, and that's what you see on the 4 hour. Before I go down to a 1 minute, so I want to emphasize this again. On the 4 hour, I'm trading the 4 hour power of 3. So it's the open, since this is a down close candle, I'm trading the open high, and I want to get my setup at the high right there. I'm starting price action at the high right there because I'm at premium for the session. I'm above the opening at 2. Look at the time down here. The opening is at 2, right? It goes all the way up. That's manipulation, accumulation, manipulation, then distribution. So as soon as it runs all the way up, I'm looking for signatures and price action signaling to me or showing its hand that, hey, I'm actually bearish, looking for SMTs with the Dow. I'm looking for change in state of delivery at the right time, looking for true order blocks and all of those things. So here on the 1 minute, we have this market structure. Oh my goodness. This is fucking crazy. Come on now. So let's wait for it to load. I'm gonna have to pause my video for a second, wait for it to load, then continue because it's gonna be a long this video. Let me give it a few seconds. Okay, I'm stopping. I'm gonna come back with it when it's back. Okay, we're back. So now here comes the interesting part. Okay, that was just me showing you the narrative, the logic behind my trade, and basically what I was actually anticipating and what I did, and I waited for this thing to pan out. Okay, everything for the smaller time frame to actually be in alignment with the hard time frame. So this 4 hour bearish order block is the opening of that thing right there. So I'm just gonna remove every chart here and only remain with this 1 hour because I just wanna I'm interested in starting price action as soon as we hit that bearish order block right there on the 1 minute, which is the same line as that, and it's the same line as this line here. So now I'm just gonna zoom in on the 1 minute, and so we can all study price action right here. So I'm trading the London Open, which begins at 2. It begins at 2 and it ends at 5. So I'm trading the 4 hour power of 3, and I'm looking for frameworks now, AMD or the market maker model, right? So as we open, the opening at 2 is this up close candle right here. So an opening for the up close candle is down here. So you extend that thing out, it's gonna tell you when you're at premium or when you're at discount. So if I'm open here at 2 and I rally, I'm most likely gonna leave a wick up there, and I'm looking for my shorts at premium above the opening at 2. And it is even better if the opening is also above the midnight open, which is down below somewhere here. I forgot to actually have this thing outlined. The midnight open is down here, right? The midnight open. This is the midnight open right there. So this is the midnight open. So we are above the midnight open. The midnight opening price. I'm gonna put this in the middle right here. So we're trading above the midnight open. No, let me put it on the right. I normally put it on the right. Why do I put it in the middle? We're trading above the midnight open here. Price goes all the way up, and during the opening of London, okay, I want to be a seller in premium, so I'm annotating all my premium arrays, and I want to see which one does price respect. Okay, so as it goes all the way up, right, I can see that it's leaving some sort of accumulation. This is now a framework for my market maker model. So I'm looking at this accumulation, which is as my original consolidation, and I look at how these lows are actually relatively quite lows. This midnight open is keeping them uh, it's supporting price right there. This midnight open is actually a great support and resistance. Okay, it's the true support and resistance. So you look at how price is actually finding support at the midnight open, and then after it rallied, closing above the accumulation area right there. Now on retracement, the smart money is going to want to accumulate longs either at the equilibrium of the consolidation range or just a slightly a discount. And what PD array do we have that smart money can use to accumulate longs before this rally? We have this BPR here. You see that how that BC is supporting price. Price went all the way down, filled it completely, went up, went down, below it again, and then it closed above it right there. Went all the way up and then it came back. This is a strong support area. Price has been efficiently delivered on both sides here. So this is now a BPR. Smart money used that to accumulate longs. How do you know that? You look at this displacement about the high right there. Every time smart money takes out, you see when it takes out buy side liquidity here, it sells to those sell stops right there. You see this reaction is the reaction is a result of that. A discount of that range, they're gonna want to accumulate more position. As you can see, I'm saying reaccumulation of that bearish order block right there, bullish order block, sorry. It's a down close, which is a bearish candle, but this is a bullish order block because now we're looking at the context. Okay, look at the opening price is 17,510.60, and I want to look at the low of this candle right here. The low comes in at, now you focus right there, the low of that candle comes in at 17,510.30. So it went below with 36 or just 0.3 ticks. Okay, because this is 60 and that's 30. That can be buying and selling pressure, folks. Okay, so it rallies and it hits the bearish order block. Now I'm engaged with price action. Okay, I'm studying it. The last up close candle, when do we close below it? Down here. So when we close below the last up close candle, what am I viewing that candle as? It's the change in state of delivery, the first order block that we had. The last highest up close candle prior a run to the downside. You extend the opening of that candle, that's a change in state of delivery. That's a bearish order block. Okay. Look at how price respected that order block here. You don't go short right then and there. You want more confirmation. I prefer a bearish market structure shift after that change in state of delivery as a confirmation on that smaller time frame. You know, a bearish market structure shift below a short-term low, we get that here, but that short-term low leaves us with another bearish order block. Now I'm interested. And what do? Because we never came back to retest that order block right there. Even here, we failed to do that. What does price do? It accumulates, consolidation. And now we are getting closer to the opening at 3. So there's another power of 3 coming. We are still at premium, guys. We are above the opening of that 2 o'clock, the session, right? We are above the open. This is a true opening, true open for London, right? We are still at premium because we are targeting the sell side liquidity here and potentially those imbalances and the bullish order blocks at discount and potentially the swing lows. Okay, but we already have the manipulation leg here. I can already frame this as my manipulation leg, and I can just do my standard, project the fibs and actually get my standard deviations here as my target to say, okay, I am looking at this as a manipulation leg, and therefore I can project this leg, get the standard deviations to actually use that as my target, but it has to be coupled with some sort of PD arrays, right? You look down here. This is another framework supporting the bigger framework here that we are in a sell program now. So that's a low risk sell right there. That's a first stage distribution right there. And this was the second stage distribution, which was the ICT Silver Bullet, but I'm coming there. At 3, what does price do? This is 3 o'clock. The opening price is 17,537 even. Price opens and it rallies. It hits that bullish bearish order block. The sentiment has now been initiated. We are bearish. Okay. So this, I'm viewing at this as a Judas swing. Okay. We clear buy side right there. Where does this candle close? It closes back inside the range here. Now, as it drops lower, and we got to close below the range here, I'm already bearish. And the guys actually went bearish inside. They actually sold this bearish order block. And at the opening, I always tell them that the opening might come back and revisit the PD array if we are still trading in close proximity to the PD array that we used as our entry. Price might still revisit that, so you don't rush to trade your stop loss. But the bearish order block here, I don't need to see price go back and revisit that order block. As soon as I get it close here, I'm already anticipating this to be my bearish order block. As soon as I get it close here, this candle don't need to actually go all the way up and touch this bearish order block, I'm already bearish. When it opens and runs, I'm already bearish. I'm looking to any PD area that we can get that's close to this bearish order block. And here we made an immediate rebalance with that candle right there. That's a strong signature in price. Normally, once that happens, we get such candles. It runs like that. Unfortunately, it was just before the opening at 3, so we accumulated and then we revisited the bearish order block. There was another entry. As soon as it opens and it runs, we know that it's not going to run all the way up here. We have so much things supporting price and resisting price to go higher. One shot right there, it went all the way up and it closed below this accumulation or BPR. I'm saying this is a BPR now because look at how from that high to the low, price has been delivered to the downside and it was delivered to the upside. Now we've closed below the range. So this area here is a balanced price range. We don't want to see price go back to the midpoint of this range. Okay. And what do we have below that? We have a fair value gap and that volume imbalance. That's where I went short again. My stop loss was just below the volume imbalance and up just above the CE of this, the midpoint of this week right there. I went short and I was targeting initially the lows here, that small fair value gap right there, and that inversion fair value gap there. And also I was working with my fibs, right? Projected this Fibonacci, the manipulation leg from the swing high to the swing low. If you get the negative 1 standard deviation, these are my settings by the way. If you get the negative 1 standard deviation right there, it means that you are expecting at least the same manipulation leg to be traded but in the opposite direction. So if I were to add this leg but in this direction, that's what you would get right there. Those are the standard deviations that Michael taught us. Okay, they are very, very useful. They are very precise. Look at how we just reversed after hitting that negative one standard deviation. But yes, we had that inversion fair value gap also as a PDRA discount, which supported price and pushed it higher, but it wasn't confluencing with this negative one standard deviation. If this is a manipulation leg in the opposite direction of the intended direction for the session, we are definitely going to hit the negative one standard deviation. It's the low hanging fruit. If we get a manipulation, it should give us 2 times the price, the leg in the right direction, So the negative one is always a good low hanging fruit to aim. So here you got another AMD. So this is accumulation, manipulation, and distribution. So now you look at the opening at 3, it's accumulation, and it opens and it manipulates. We want to see this because they are trading now. I'm showing you a power of 3 of this opening candle at on 1 minute. We open high, low, and it closes right there. It's the same candle we are trading on the 4-hour with the same concept. We opened manipulation, Judah swing. We make the smart money reversal right there. Low risk sell, first stage distribution, second stage distribution with the ICT Silver Bullet. Now, this is now after 3. So we are inside the Silver Bullet hour now. We are already bearish. Silver Bullets are a form of continuation, especially when the sentiment is already been established in the market. They're a good what can I call, they're a good transport to take us to that destination as a continuation, matter of continuation. In most cases, it is a continuation, and they are so easy to catch when they're a continuation like this. This is how I like them most. So that's the trade we took on Discord on Friday, and it delivered nicely to the downside. So now you see I'm trading this candle on the 4-hour, this bearish candle. Let me zoom in again. So it had stopped right there for a second. Because I pressed escape, so I'm not gonna press it now. But yes, this is what I was trading, this candle right there. Okay, this candle, the open, high, low, and close. Okay, right there. Beautifully done. Beautifully fucking done. Okay, yes, it might not have reached the lows here. I don't need to see price reach for the lows, guys. I always have something to target in that range. Below equilibrium of that, boom, you got your low hanging fruit target. Like if you are on the 1 minute, you can use your big lot size there. You don't need to swing this thing. I can make the same money as the guy who was trading this move to the upside on a 4-hour. Maybe I make more than him on a 1 minute. Yeah, its price is fractal. So what happens on the 4-hour is the same thing that happens on the 1 minute chart. So yeah, that was the trade on Friday. It was just beautifully delivered. This is beautiful price action right there. Beautiful price action. Okay, beautiful delivery to the downside. So on Friday, this was on Thursday. On Friday, this is what transpired. I always have a framework of AMD, accumulation, manipulation, and distribution. So this is what happened. We took out Asian lows, made SMT with Dow Jones, I believe. And then after that, this was a silver bullet entry because this is the opening at 3. We should have swing into the 4-hour bullish order block right there. And we're also at the new week opening gap high. So we just, painting inside that. And I was looking at the accumulation. This is the 2 o'clock opening. We extend that thing out. You are at discount. So we are at discount. What do we have? The first fair value gap is our silver bullet to the upside. I'm already anticipating a move higher. Price retraced. We have this inversion fair value gap. Look at how it respected the CE right there. Quickly ran higher, creating these outclose candles, creating and converting them to bullish breakers. And then look at that inversion fair value gap also being retested. Look at the bodies of the candles staying inside that range here, the inversion fair value gap. And further testing the breaker, I think it reached the CE of the breaker and then it rallied. fair value gap just above me net open, boom, and then retracement into a 5 minute fair value gap here, then continue to those 4 hour fair value gaps that I actually deleted, which was my drawn liquidity for the session, for this whole session here, and they delivered just in time. If you look down here, this is the London. There's a 4 hour power of 3 again in action. Open, low, high, that closes somewhere right there. So you are trading that 4 hour candle. That's what I've been actually talking about on the live streams. Okay. So I think we are done for this recording. I'm now gonna have to post the video on YouTube, and I'll be live on Discord. I'm gonna be live on Discord for the weekly forecast. I'm gonna be live on Discord for the student progress review with my private students now. So if you wanna see me and if you wanna be part of that, it's I just opened everything for the public to see what we do on the weekends when we are getting ready for the week. You wanna be part of that. So come join me now on my Discord, because I do these things on a regular basis. I'm gonna be live with the community at large on my Discord, maybe once or twice a week. Live trading with them as well, but this boot camp is open to anyone who's got 3,000 on their account and they want to flip it to 500,000. Come join me, let's do it for free. Okay, so yeah, that's me. I'm signing out. See you on the next one. I hope this one was very much insightful. I hope you took something from this live stream, but it's very, very insightful if you ask me. And yeah, just take down notes, come back, rewatch it, and don't watch it once, watch it 5 times or 10 times if you have to. Journal, write everything that I mentioned here. I know I'm a little bit fast. I don't want to make like 1 hour long videos. So peace out.